What's going on, guys, and welcome back to the channel. I wanted to make a very quick video today to emphasize a point that I've made previously, which is that anything that you see or hear in the media, now that includes YouTube channels, including my own, financial news outlets, whatever it may be, with a massive pinch of salt. And the reason for that is because content creators of any kind have an agenda, of course, to create content. Now, the problem with that is that, especially in the world of finance and investing, and particularly long-term investing, we all know that the best piece of advice is to buy solid companies and hold them for 5 to 10 years. Now, the problem with that for content creators is that that's not necessarily conducive to creating regular content, right? If we're all telling people just to buy companies for the next 5 to 10 years and don't touch them after that, well, then you're eventually going to run out of content to create. And therefore, there is an incentive for content creators to create this environment where it seems like investors should be constantly taking action and doing things, and as a result of that should be drawn to their content, right? And that's where, in my opinion, there can be a little bit of a contradiction between a content creator providing the best sort of financial advice, and I don't mean literally financial advice in terms of what stocks to invest in, because I don't believe that anybody should be listening to anybody that creates content in order to select their stocks, right? Because they could have a variety of different agendas for that. It's just not a good approach. What I actually mean is the best course of action when investing. So investing for 5 to 10 years rather than constantly trading in and out of positions. So often there can be a contradiction between that and the content creator regularly creating content that their viewers would enjoy. Now, for me personally, the whole point of the videos that I create is to try and give people a very short glimpse into the kind of things that I might do if I'm looking to invest in a particular business. But of course, in 8 to 10 minutes or however long the video may be, it's a snapshot, right? It's not even a drop in the ocean as to the amount of detail that is required when looking into a business. So that's kind of another contradiction there as well, because generally speaking, nobody wants to watch a 2-hour video on a deep dive into a company, for example. Now, with all of that being said, right, I wanted to show or give an example of exactly what I mean by this, and it's to do with Jim Cramer. So I actually quite like Jim Cramer, right, which sort of goes against the grain of most people. I think that he's a good entertainer, and that is what I take him for. He's a very smart man, and he obviously has a lot of experience, but in terms of the things that he says, I just think that it's all entertainment rather than education. But clearly right now there is a lot of volatility in the markets, right? And we can see here that year to date the S&P 500 is only down now 5%. At one point it was down as much as 13%. So there was a lot of fear in the environment. Now I've taken 2 different videos that I want to show you, and they are 3 days apart, right? And Jim Cramer in one of the videos is saying that effectively things aren't looking good for the market, and then 3 days later he is saying that the bear market is over. So I wanted to show you these videos and why people should take everything that he says, and as well as myself and literally any sort of content that you watch or read or whatever, with a massive pinch of salt. Anyway, here we go.
How can people be so confident that Powell won't crush the economy? Well, I think it's dawning on many of the biggest of investors that this economy is so strong that it can handle a series of rate hikes, because so much of the spending we're seeing is related to the great reopening and the normalization of remote work that's finally drilled into their heads. That said, while I appreciate hope as a mindset, I'm not as confident as a lot of the buyers who are paying up at the end of the day. I suspect things simply aren't that rosy. We are seeing a level of enthusiasm here that to me feels unjustified. We shouldn't be going back to a mentality where we like all stocks because so many of them will miss their numbers and so others will hit us with negative forecasts. However, it's clear many stocks that were stuck in a prolonged bear market have been sprung by Powell's comments. The former high flyers that have been obliterated since November by inflation fears have suddenly gotten a new lease on life. But here's the problem. Tons of those stocks just aren't worth much, regardless of whether Powell steers us into a soft landing or a hard landing. We've been saturated with awful merchandise, the greedy men and women of Wall Street.
So that video was posted to YouTube on the 22nd of March. And for what it's worth, I think that he makes a good point. Now, Jim Cramer is basically not liked by most retail investors, and for good reason, right? So, for example, he said that Bear Stearns was an absolutely fine company. 7 days later, they went into liquidation, and of course, I doubt he could have foresaw that happening. But a lot of people, and that's just one example, right? But a lot of people just generally don't like him. Anyway, that was on the 22nd of March. A few days later, so on the 25th of March, he posted this video, or CNBC posted this video.
One that I worry about the most is the fact that 13% of the calories are being taken out with Ukraine, Russia, and the soy harvest is going to be bad in Brazil. And therefore, there will be famine. And famine does produce terrible political results, not just humanitarian. So I'm worried about the price of food. I think the others are going to start going Jay's way. Not yet. But when I hear Professor Siegel say, I'm worried about this, well, you know what? I'm not. Everybody else must be worried. Everybody's worried about the same things. I keep thinking I am worried that how did I miss the Microsoft from 280 to 300? How did I miss the 70 points in NVIDIA? What was I thinking? That's what I'm worried about.
Because maybe, Jim, you make the case, and you can make the case, that everything the professor said is known. It's all in the market.
That's it. That's
Jay
why
Powell has messaged. He's told you.
That's why
he's told you what's coming.
Have you looked? There are 600 companies that came public in the last 18 months. I mean, there's like 7 on the trade north of $9. I mean, this is the bear market, just like 2001, except for we have rates much lower. And Brian, you remember those days? I mean, those companies were all jokes. A lot of the companies. I'm looking at all the companies that are under 10. Many of them are actually making money. We are in some weird market that it's a bear market that no one called it as a bear. And I think the bear market is over.
Wow, and that's a big call. Brian Belsky, react to that.
So 2 videos that were released just 3 days apart, coming from the same person, but with very different views. And that's the point that I'm making, that everything that you see and hear in the media should be taken with a massive pinch of salt, because ultimately you don't know what somebody's agenda is. And I don't mean that in the sense of there being anything sinister in what Jim Cramer or any other content creators are doing or saying, but the point is that at the end of the day, it's entertainment, and that is what it should be taken for. So yes, ultimately the point of this video is that whilst there is a lot of volatility in the markets at the moment, and I suspect, in my personal opinion, that this volatility, this kind of volatility, is only going to continue and potentially increase, you shouldn't be scared of the kind of things that you're seeing in the media, right? Because we know over the long term, generally speaking, the markets do go up as a whole. Now, of course, there'll be a bunch of stocks that do not recover. Generally speaking, by and large, I mean, this graph really does speak for itself. Anyway, guys, it was a very quick one today, but basically the message of the video is not to worry about the market volatility. You should be investing for the long term, and don't pay too much attention to what which is a massive contradiction anyway, or any of the content creators say or do. Anyway, guys, I hope you've enjoyed the video, and until next time, thank you.